Welcome back, everyone. Let's go out to Eunice Yoon right now, find out what stocks she is watching for today, especially in Taiwan, Eunice.
Thanks a lot, Bettina. Yes, I am watching UMC once again. Also, some of the other technology issues, just because of the bounce back that we saw in the ADR session. UMC as well as TSMC both performed very nicely, higher by 5% each. UMC had also released its June sales numbers, which looked very strong. They had reported a 47% jump in June revenues, and that really fleshed out the second quarter. Very good for UMC. However, there are still concerns going forward as to whether or not the second half of the year is going to look as robust as the first half. Also, just because so many of these tech names have been posting strong results and probably the best set of results since the year 2000, that's making analysts a little bit nervous. They're getting a little bit nervous that the best might be behind us and that UMC and TSMC might not be able to really benefit from a strength in demand in the second part of the year. Now, some of the other stories that we're watching, I wanted to talk a little bit about Hong Kong. The Hong Kong market will probably open a little bit higher. We'll see what the Nikkei does as well, but just because the U.S. performance had been relatively strong. Also, one of the stories to keep an eye out for in the Hong Kong markets today is when the market closes, the government is going to be releasing the May retail sales numbers. Those are supposed to come in higher by 20.5% on year. A lot of people are suspecting that the vibrant tourism industry as well as the low base effect should help to boost those numbers. Keep an eye on Chalco this morning as well, just because Alcoa had announced its profit numbers. This is the world's largest aluminum producer, and it had announced a sharp increase in earnings. The results, though, fell short of analysts' expectations, so the stock actually traded lower in the after hours. So let's just keep an eye on Chalco this morning as well. Sinopec, also another one to keep an eye out for in the Hong Kong session. This is Asia's largest refiner. It said yesterday that it plans to sell the entire stake of a Shenzhen-listed company, but it will be buying back substantial assets as part of a drive to streamline its corporate structure. Those are some of the comments out of Sinopec yesterday. Also, the internet stocks. We'll keep an eye on internet stocks today all throughout the region after China's internet ADRs had performed quite poorly. It was a very volatile session after NetEase had said that the second quarter revenue would be hurt by competition as well as new Chinese regulations that led to a lower number of users. And speaking of Chinese regulations, there was a report in the state media yesterday saying that China is thinking of merging up to 6 of its telecom carriers at the parent level to resolve its long-delayed 3G mobile licensing program. Let's get a little more detail on that with Philip Chan, the research director with Shenwan Wangguo Securities. Philip, thanks for joining us this morning. What's your take on this chatter, this talk that the state media is making about a potential merger in the telecoms industry in China? Would that make sense?
I think overall it wouldn't make sense at this moment, because it would create probably more confusion for foreign investors. Basically, if you remember for instance, China Mobile and Unicom were set up as actually competing units, right? And also China Telecom, China Netcom on the fixed line side. So I would say for foreign investors, it would, like I said, it would be just seen as another policy risk, country risk that you would attach to China. It would not be seen as positive. However, it depends on if it is going to go ahead and at what speed. My guess is it's not going to, even if it is thinking about, if they are thinking about pushing ahead, it won't be in the short term.
But it's something that's been precipitated by the fact that a couple of years ago, the administration promised every single telco operator, yes, you will get a 3G license, and now you're looking at 4 companies, all of them with 3G licenses. Well, however you feel about 3G, it's fair enough to say that it hasn't been the success everyone thought it would be several years ago. So doesn't some kind of consolidation need to happen there? Or is the competition just what, is competition what, as it is right now, what needs to remain status quo?
I think it should remain status quo for the time being. As I've said, because of these kind of, even if there's thought about them and they're thinking about pushing ahead with this, it will take time to implement. So you could be looking at even a year before you start seeing something happening, but it's just talk at this moment. And anyway, it's speculative talk. It's not been verified at all.
Philip here in the newsroom. Good morning to you. Is this a case perhaps where competition is a bad thing, where the government perhaps may be encouraging the companies simply to consort together to have more purchasing power when they go out and buy equipment, and second, not to duplicate their own individual resources? In other words, for example, Bettina just mentioned, if each company were to build out their own 3G network, and in the end they were to merge anyways, that seems to be a waste of time and money to build out 4 different networks in the end when they would eventually merge together. So is this a case where they look at, perhaps an example is the U.S. markets, where we had a number of telecommunications companies build out the infrastructure for when the internet during the dot booms, and in the end they all ended up merging together anyways?
Yes, it could be a case of that. I think that just being pragmatic, I think it could be just again an idea which is being floated around, and to see what the market reaction is, or say industry reaction.
Philip, my other question would be, is this a good thing for consumers, though? Is this a good thing for the Chinese consumers, for these companies to continue to merge together? Is it a win for them?
I would say it's probably not in the short term, but I believe, I just don't think it's going to happen in the short term.
Well, they've got very cheap tariffs, very good service generally. I guess the big problem that a lot of people have is anytime you have the administrative powers matching together a weaker and a strong service, it doesn't always work out very well for either of those companies. Just before we let you go, Philip, just want to get your broader take on this new SME exchange in Shenzhen. There was a lot of excitement when they started trading. They started, I think, with about 8 stocks, and there are rapidly lots more coming on to it. Now, how much liquidity, and how attractive is it? How much liquidity is it going to draw away from other China plays?
It's still pretty small, in comparison to the rest of the bigger market, the wider market. But it's just that each one of the new listings is attracting a lot of attention because the prices are ending at least double, maybe triple, on the first day of trading or during intraday trading. So I think that for the moment, in the near to medium term, it's going to continue to attract attention, but the volumes are still pretty small, compared to the rest of the market.
Philip, do you think that new bourse has the potential of becoming a NASDAQ for China?
I think it's too early to say. You see, it's going to have to be built up over several years, and I think the quality of the companies is going to have to come through. You've only had actually just over a month's trading for this exchange, and only a handful of stocks. The thinking behind it was to try to actually ease some of the listing requirements as we go forward. If that happens, then I think that it's actually the increased regulation that they need, not really easier regulation.
We're going to leave it there for now. Philip, it's always nice seeing you. Thanks for dropping in.
Great.
Philip Chan of Shenwan Growth Securities. We'll take you to a quick break. Back in 2.